Hello and welcome back to No Pants Profits. This is Richard coming to you still with no pants and hopefully profits. And I was going to take a look at an IPO that's actually going to be coming out tomorrow. Now, this is not in a very wide circulation IPO. It's not in Robinhood. It's not in SoFi. It is actually, I've only found it available myself in the WEbull application. So I found it in the WEbull application. It is called Cingulate, and it's kind of an interesting IPO. It's not something I know if I'm going to invest in yet. I do want to take a look at the S1 documentation with you. It is a medical company that does ADHD drugs. I don't generally have a huge background in the medical companies, but I am in the clinical trial for the Pfizer vaccine. Well, I was in, still technically in the clinical trial for the Pfizer COVID vaccine. So I think I can take a little stab at it. But I'm going to do this review myself. I've not looked at the stock other than knowing they make an ADHD drug. I want to look through it. They've got some weird stuff with a warrant, which is giving you the ability to purchase a share now and then purchase a share later at the IPO price. So this is kind of a unique one. Cingulate, today is Monday, December 6th. It may go public on Tuesday, December 7th. Again, this is like an Austin Gold. They've pushed a couple times. They've pushed again. They've pushed again. You'll see when we get to the S1, they're on revision 5 of their S1s. I've never seen an S1 go past revision 2. But let's go ahead. Let's take a look at Cingulate. So here is their website, cingulate.com. And they're not making anything yet. They got their pipeline about us. Cingulate is a clinical stage biopharmaceutical company focused on the development of, taking too long to read. But the idea is it's once daily ADHD medicine. Right now, ADHD medicine, I know this because I have friends with ADHD in high school and different things like that. But ADHD medicine has to be taken a couple times a day. The idea is this is one pill. It's like the Viagra of ADHD medicine. But they're saying that they have a 1.5 to $2 billion market. We can look at their pipeline. They currently have 2 candidates in preclinical development. Preclinical development has the potential to capture 1.5 to $2 billion of the ADHD market annually. Third production candidate will be developed to serve 5.2 billion U.S. anxiety market. So they're going for both ADHD and anxiety. And currently they have 2 product candidates. And what is unique about them? USP, which stands for Unique Selling Proposition. Again, we're not even in their documentation yet for their IPO, but we are actually in their on their website. It works fast, less than 30 minutes. Lasts the entire active day, up to 16 hours. Provides controlled descent of plasma drug levels to optimize treatment. So they're saying that there's no crash there. And you'll see this is where everything is. So you've got the different names for the drugs. You've got Mastery and you've got Accomplish, and then you've got this little formulation trial right here. But you'll see they are approaching phase 3, which is a much wider rollout. I do know about phase 1, phase 2, and phase 3 from the COVID vaccine. I did the clinical trials for the Pfizer COVID vaccine. So phase 3 is when you kind of really get going. And they're going to initiate phase 3 now, Q4 2021. So that's why they're going public right now, because phase 3, you know what that costs a lot of? That costs a lot of money. You need things like this guy right here. I'm going to see if I can give you an idea. I got to cover the number. Whenever you get someone in a clinical trial, you have to pay them. So you've got something like this. This is my payment card for the COVID trial. And I get paid there every time I go to the office and every time I fill out a little diary that's on my phone. And that's how these trials actually work. So literally all I do, I only have it on an Android phone, so I can't show you. But essentially they will pay you every week for going, for going to this little app. Let that load real quick. It's got big screen. But essentially where it starts to get expensive is they'll pay you to go in and say, we're gonna focus. Hello, I don't have any COVID symptoms this week. I say no, and I'm good to go. And they'll pay me for that, and I'll go into the office once every 6 months or so. They like the clinical trial participants to keep like a journal or a diary of what's going on. But let's go ahead, let's take a look. So you see they've got one going into phase 3, one going into phase 2. Well, no, not even phase 2. So they only really have one drug. They're talking about 3, but they only really have one drug. So these are the branded references to the phase 3 clinical programs. Those names are the brand there for the, let's see, partners, just for fun. Who are they working with? Comprehensive Drug Development Services. Again, not really seeing that. This one looks like the most useful one is Premier Research Professionals. But we're looking at it here again. I am not a drug person. Let's take a look at careers. So they're not hiring much. So that's a lower cost overall. If you're not going and hiring a crazy number of people, they're hiring an executive assistant and a senior accountant, and that seems to be it. We've looked at the pipeline, ADHD patient experience. Disorder affects millions of children and continues into adulthood, marked by an ongoing pattern of inattention, hyperactivity, interferes with functioning development. No single test for ADHD. We overprescribe everything. So essentially, their most advanced drug product will be the first true once daily. I'm not even going to try and pronounce it, for the treatment of ADHD, providing the onset of action within 30 minutes of efficacy. So there's an immediate release, providing 35% of the total dose, beginning 5 or 6 minutes after administration, designed to achieve therapeutic efficacy within 30 minutes. 3 hours after, it provides another 45%. 7 hours after, it provides 20%. Interesting. Very interesting. These next generation 80. So yeah, it's true once daily multi-release tablet. So it's kind of like one of those Tylenols or whatever that you'll take and it works all day. That's kind of what they're looking at here. Let's look at their technology real quick. Okay, so here's where it kind of gets interesting. Essentially, this thing will sit in your stomach and it will dissolve. You've got a film coat, erosion, and barrier layers. That's where their technology comes, is the time release on their ADHD medicine. Capable of achieving true once daily dosing. It's an erodible barrier, which is erodible by time, wrapped on a drug-containing core to give tablet in tablet dose form. So much like what's his name, Exhibit, who said, I know you like cars, so I put a car in your car to make it more cars. They put a drug in a drug in a drug that gives out different 35%, 45%, and 20%. So, interesting. It's amazing how they can give out less and then more and then less. But that is Cingulate in a nutshell from their website. But let's go ahead and let's look at my favorite thing. Let's look at their S1. This is a document that has been filed by Cingulate 5 times. Every time they've pushed this IPO, they've pushed it because they've made a change to this SEC report. So this is a document that is filed with the SEC by Cingulate. And with their filing with the SEC, they're saying we want to become public, and we want to become public on this date. And it looks like it could potentially be tomorrow, December 7th. So Tuesday, December 7th, 2021, that they actually do go public. That's what a couple sites are saying. But much like Austin Gold, which is still kind of not materialized anywhere, this could be the same thing. So, let's see. Kansas City, Kansas. That's where they're actually based. They're actually based in Kansas City, Kansas, and they've got law firms in New York like every other IPO does. Well, I jumped to the top. Okay. Let's see. Approximate date. Again, we're not even sure what the approximate date was. So they will be issuing a stock as well as a warrant. So the warrant will allow you, we'll see if we can get more information on the warrant in the S1, but the idea behind a warrant, I was not super familiar with this, but essentially a warrant is like a stock option. A stock warrant gives the holder the right to purchase the company's stock at a specific price at a specific date. The stock warrant is issued directly by the company concerned. When an investor exercises a stock warrant, the shares fulfill the company's obligations and are not received by another investor to buy directly from the company. So stock warrant is the right to purchase a company's stock at a specific price at a specific date, and I really hope that's going to be in the S1. Because if I look over on other forums, it says Cingulate announces 3,571,428 unit IPO at $6 to $8 per unit per share. Well, it's not really a share, but each unit consists of one share of their common stock and one warrant to purchase one share of their common stock, essentially at a future date at the IPO price. Let's see. All right. Cingulate. Okay, here we go. Cingulate is offering units, each consisting of one share of our common stock and one warrant to purchase one share of our common stock, or each a warrant at an initial public offering. No public market exists for our common stocks or the warrants comprising the units. The estimated public offering is between $6 and $8, and they're using the midpoint to figure it out. Units, okay. Perfect. So it's still not saying when these warrants are going to be... the warrant will be, okay, under any discount. So the warrant's just going to give you the ability to purchase more shares at the IPO price. Let's see. Clinical stage biopharmaceutical company doing that PTR, or the precision time release. That's the, exhibit said you like cars, so you put a car in your car, and then put a car in your car in your car. Essentially, it's saying that it's a drug in 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 a drug, and they're saying ADHD is a big problem in the U.S., especially with the younger. Most patients will receive a second booster. Okay. Here we go. Hold on. Let's take a look at this. Most of these extended release dosage forms are required. However, with the current... Here we go. This is interesting. However, with the current once daily extended release dosage forms, most patients will still receive a second dose or booster dose for administration later in the day, typically in the early afternoon, to achieve entire active day coverage and suffer from a multitude of unwanted side effects as a result. We believe there remains a significant unmet need within the current treatment paradigm for a once-daily ADHD stimulant medications with lasting duration and a superior side effect profile to better serve the need of patients throughout the entire day. So they're already in humans, not just in monkeys. So PTR is precision time release. That's their tech. That's what Cingulate has that's different than the other people. They're saying, trust me, I don't know. But they're saying they have that precision time release. We've already seen these images. Kind of gives you a little idea. We've already seen that image on their website. Eliminates short-acting stimulant boosters, lower abuse potential, because you're not going to pop all them ADHD pills. If you notice, a lot of people who don't need ADHD in the college perspective nowadays are taking ADHD to cram for a test and everything. Lower cost than providing 2 pills. Significantly improved tolerability if it's only 1 pill. Available in 8 dosage strengths. Wow. So depending how much you need, get a big pill, bigger pill, horse pill, Our goal is to be a leading biopharmaceutical company. We're going to see how much money they lose. This is all fluffy. Can't wait to see how much money they lose. Okay. We are a clinical stage biopharmaceutical company with limited operating history. We have incurred a history of operating losses and expect to continue to incur substantial costs for the foreseeable future. We are not currently profitable, and we may never make any money. Hey, look, a pandemic such as the illness could cause us to have issues. Social issues around the abuse of opioids, stimulants, including law enforcement concerns over the diversion of regulatory efforts to contact abuse, could decrease the potential market for our product candidates. Perfect example, I was watching Dexter New Blood last night, and it was all about stimulants and drugs and stuff like that in the Dexter episode. So our business has very extensive regulatory requirements. Third parties. Organizational structure. Hey, look, who would guess it's a Delaware corporation. Their primary offices are in Kansas. Oh. Really? Okay, so there is a dividend. And you go to reverse stock split. These are for their existing investors, not for these new ones. Emerging growth companies, they're not going to get audited nearly as much. Okay. So, units being offered by us. 3,571,428 units, not shares, because there's two things in the unit. It will consist of 1 share of common stock and 1 warrant to purchase a share of common stock. The units will not be issued or certified, and the warrants part of such unit immediately separable, which will be issued separately but will be purchased together in this offering. So you're essentially buying an option. So you're getting a unit, and the warrant that comes with it is going to be an option. I'm probably going to buy this just to see how it works. I've never seen anything like this before. So here's what it's saying. So you're going to get your shares at IPO if you get it at the IPO price. And each warrant will have an exercise price of blank, which is going to be 100% of the public offering price per unit. Will immediately be exercisable, okay? And will expire 5 years from the date of issuance. To better understand in terms of warrants, you should carefully read the description of the security section of this prospectus. So essentially, the warrant is going to be, you're going to have an option to purchase an additional share for the IPO price if you get IPO shares. So you'll get the share, plus essentially a warrant is an option. So you get the share that you've got, plus an option to purchase an additional share. So that's kind of a cool thing. I've not seen it before. I'm probably going to buy a little just to see how that works. So yeah, you see how the number of shares kind of doubles there. So up to that to 10 million shares. Assuming no exercise of any warrants sold in the offering, but that's a way, so what the warrant says, it's a way to issue more shares without really issuing more shares and diluting. You're basically selling an option along with your IPO. And again, each warrant will have an exercise price of why that is blank is because the warrant's exercise price is going to be what the IPO price is, and it's going to be between $6 and $8, which we'll take a look at. Okay. Common stock is going to be okay, so they're going to have the common stock and the common stock warrants, so you'll get both of them. So CING and CINGW. So we'll see, because that looks, yep, CING is what I'm seeing if I look on my phone. I'll see Cingulate, and we'll get, when we get that IPO shares, if we get them, we should get CINGW, which is essentially going to be an option to allow us to purchase a share at the IPO price, which should be between $6 and $8, but we won't find out until later this evening what it really is. Okay, we're just going to see they lost a lot of money. Clinical stage pharmaceutical company with limited operating history. Who would have thunk? They got a lot of stuff they got to comply with. Business plan, get our clinical trials for all that. Most clinical trials, more than 50% of clinical trials fail. So, comply with the marketing requirements. They've never made money. We've never generated revenue from operations, unlikely to generate revenues for several years. Currently operating at a loss, and expect our operating costs will increase significantly as we get into trials and got to pay all of these trial participants money on their magical clinical trial card. Pretty much, this is an interesting one to buy. It's the clinical trial card because clinical trials are going like crazy. So as of September 30th, 2021, they had cash of $1.9 million. They continue to expend substantial cash resources for the foreseeable future for the clinical development of our product candidates and development of any other indicators or product candidates we may choose to pursue. We're uncertain when we'll be able to achieve or sustain profitability, if ever. If we achieve profitability in the near future, we may not be able to sustain profitability in subsequent periods. Even if this IPO is successful, meaning if the IPO goes out and it goes at a reasonable price, it doesn't crash immediately, we'll need to raise an additional capital to complete the development and commercialization efforts. So they're going to need even more money. So they think that everything they're going to raise in this IPO will support them for 12 months. 12 months. They're going to need much more money after this, so they'll issue more shares or they'll raise more money, timing of FDA approval and all these other things. So this IPO is going to give them a run rate of 12 months of capital. Raise additional capital through future collaborations, strategic changes in law, Ability to use net operating losses. So the main differentiating factor here is their time release on the ADHD. So you only need one drug for an entire 16-hour day. They're talking about their ability to make money from their product candidates. Clinical testing is expensive. Yeah, difficult to design, could take many years. You're working with a lot of third parties. This company, Cingulate directly, it's not doing the clinical trial. You've got third parties that are doing the clinical trial. Let's see. And they're generally placebo-controlled clinical trials. So you've got someone taking a sugar pill, some of the people taking a sugar pill, and some of the people taking the actual drug. Lead product contain controlled substances. Yay! So, yeah, they're saying they could have some legal problems there. Enrollment of subjects in clinical trials. Pfizer had to pay. I'm in the Pfizer trial, so Pfizer I know had to pay a lot of money. I know so did Moderna, so did Johnson & Johnson. And believe it or not, there's about 7 or 8 other clinical trials. You've only heard of Pfizer, Moderna, Johnson & Johnson for the illness that's been going around. But, there's about 7 or 8 other, AstraZeneca and some other no names that are out there that have done trials and you've never even heard of their vaccine. So, trials fail. Cause, hey, side effects. If you have an erection lasting longer than 4 hours, seek medical help immediately. Okay. If they don't think they're significantly better than what's there, the FDA won't approve them. These are not supplements that don't need to be approved by the FDA. This has to be approved by the FDA. So they are preparing to conduct their first phase 3 clinical trials, may be unable to successfully complete it or any future clinical trials. Again, they have to write this. These are the risk factors. They have to tell investors, even if they have regulatory approval, such approval may be limited. So for those 3 drugs, they have recall, suspension. Our employees may engage in misconduct. You know what that's called? We call that the Theranos defense. If you're familiar with what's going on with Theranos right now and Elizabeth Holmes, I call that one the Theranos defense. Modify business practices, pay fines. Current partners may have recalls. They need FDA approval for their product candidates. So they've already filed them with the USPTO. So again, if we look, let's see if we can find their products again. Pipeline overview. So they've got Mastery Pediatric, Mastery Adult, Accomplished Pediatric, and Accomplished Result. And those are their copywritten names. Disruptions of the FDA. Global health concerns can hinder the ability to hire. Recently enacted and future policies may increase the difficulty for us to obtain marketing approval for selling this ADHD drug. Unfavorable pricing regulation. Bernie Sanders getting some regulation that's going to make it not that you can sell drugs for any price in the United States. It says Bernie Sanders. That's the Bernie Sanders line right there. Healthcare reform initiatives can harm representatives because Bernie, all these numbers, all this thing, it assumes that Bernie never gets anything through. And he just goes, sleepy Bernie Sanders. So, they're saying if Bernie wakes up and actually does something to get universal healthcare, we may expend our limited resources to pursue something and it might fail to make money. Market acceptance by physicians, patients, that's why, as strange as it sounds, I always wonder why these drug companies advertise to the consumers on TV, even though we all just fast forward TV commercials now and we got ad blockers and everything like that. But you have to get that commercial success. If this drug is approved, it depends partially upon attaining market acceptance by physicians, patients, third-party payers, and the medical community. Significant competition. Some other people might make this time release stuff. Depends on third parties. They're using a third party to make it because they're not a production house. They have limited resources. These are scheduled products, meaning that scheduled narcotics is what they're talking about when they say scheduled products. We rely completely on third parties to formulate and manufacture our drug supplies. The development of our drug candidates could be stopped, delayed, made less profitable due to those third parties to provide us with sufficient quantities. So remember, this is a money game right now. They just have to throw money to get that clinical trial done and then present that clinical trial to the FDA. And they're not going to get an emergency use authorization like some of these vaccines are getting that are out now. They're going to have to get fully approved before they put this in normal people's bodies. They have enough approval to do clinical trials right now, but to actually sell it, compete with other product candidates. Okay. Unable to maintain adequate levels of coverage and okay, this is actually interesting. Coverage and reimbursement, their commercial success. So meaning that if the insurance companies won't pay for it, it's screwed. Because Bernie Sanders is not going to make the healthcare free for all. Third-party payers, that's insurance companies. They don't get demand. This is a total gamble. This is a total gamble. They've never made money. They may need to increase the size and complexity of our organization in the future. Because remember, right now, if we look, what are they hiring for? They're hiring for an executive assistant and a senior accountant. They're probably not a very complex company. Unable to establish sales and marketing capabilities. We don't get good people. Discovering and developing product candidates, but they may not make it to market. Operating results may fluctuate significantly, which makes our future operating results difficult to predict. We can't tell you if we're ever going to make money in the future. Liquidity could negatively affect by market. Our business and operations will suffer in the event of failures of our internal computer systems. If our computers were hacked, that's the first time I've seen that one. If our computers are hacked, we could have problems. We're dependent on information technology in our systems. Intellectual property is not adequate. We may not be able to compete effectively in the market. Intellectual property rights, okay. Sued for infringing intellectual property. Our drug relies heavily upon regulatory approval pathway. That's the FDA regulation. We can not, if we can't protect trade secrets. Okay. This one's interesting. The price of our securities may be volatile, which could suggest us to class action litigation and prevent you from being able to sell your shares at or above offering price. No active trading market for our common shares or stock warrants. Common stock or warrants currently exist, and the active trading market may not develop or be sustained following this offering. We might collapse as soon as we come out. Okay. The warrants offered by this prospectus may not have any value. This is interesting. The warrants offered by this prospectus will be exercisable for 5 years from the date of initial issuance at the initial exercise price equal to blank, which is 100% of the initial public offering price per unit set forth on the cover page of this prospectus. So $6 to $8. So the warrant is essentially giving you an option to buy that stock at a lower rate. You know, the warrant is not entitled to the holder any rights as common stockholder until the holder exercises the warrant. So for every share you get IPO, you're buying an option to buy another share at IPO price for 5 years. Really interesting. They're an emerging growth company. We'll be able to take advantage of these. They don't have to do as much. We incur significantly increased cost as a result of and devote substantial management time to operating this public company. I think yeah, okay. Yeah, I think we're at the end of this here. I am going to leave this down in the link below as normal, but what I'm going to do right now is this is a gamble. It's an interesting gamble, so what I'm going to do is, this is in the WEbull application. You should get a pop-up when you go in, but I'll show you how to find this in a second. But I'm just going to put in, well, not $5,000, $500, which will be between 62 and 83 shares. The investment is used for purchasing this offering, will be locked into your trading account until the order is canceled. Okay, whatever. Congratulations. My order has been placed successfully. Maybe. Hold up. It did not want to play with me real quick. I didn't touch it for about half an hour. That's what she said. Let's see. Okay, there we go. So yeah, congratulations, your order has been placed successfully, and you'll see it is saying that it's going to be listed on actually the 8th, which the offering end date is the 7th. I got that wrong. The offering end date is the 7th, so you can only get into it until tomorrow, and it will go live on Wednesday the 8th, and people are bullish. People are bullish. Remember, when you've got something like this, what you've got is this is an upcoming IPO. The night before, it's going to ask you to confirm that you want those same number of shares. And essentially, I have gone ahead and I have requested $500 worth of those shares. So I requested $500 worth of those shares, and that's going to, if I get it, I'm going to get $500 worth of those shares, plus the warrant or the ability to buy another $500 worth of those shares, the same number of shares, at the IPO price for up to 5 years. It's an interesting warrant. It's kind of like they package the stock together with an option. And you'll see there's a couple other, again, Austin Gold is still kind of hanging out there. We've got Hashi, we've got B. Riley, Crypto One acquisition, Crypto 2 acquisition. These are all acquisition companies. But that one should be very interesting. And this is coming out the same day as New. I think. No, it's coming out the day before New. So NU, the Brazilian banking company, comes out on Thursday, which is December 7th, 9th. And this comes out on Wednesday, December 8th. That was a little bit of an overview on the Cingulate stock and their very interesting warrant system. This is Richard from No Pants Profits, reminding you that when you wear no pants, all you got left to lose is your shirt. I'll see you around for any other IPOs. Have a great one. Bye.